Hi, we're Brixmor Property Group. We are one of the largest open-air shopping center landlords in the United States with 348 shopping centers, 63 million square feet, an equity market cap of $9.3 billion, a portfolio that generated 900 million visits last year. We're located in many major metros across the United States. Our largest states include New York, Texas, California, and Florida in terms of where we derive our rents from. We're among the largest landlords to great tenants like Kroger and Publix, TJX, Ross, and Burlington stores. Our strategy is a bit differentiated. We have an industry-leading mark-to-market opportunity in our rents. And so over the course of the last 10 years, we've commenced a strategy and have executed a strategy of reinvesting in our properties accretively, bringing those rents to market, driving incredible value and incredible growth. And so as we continue to look out, that redevelopment differentiator is a very important part of our strategy. We still have a significant pipeline with the likes of Publix and in major metros across the US where we can increasingly reinvest and drive growth in what we own and control today in a market where there's a lot of great tenants that are continuing to perform, continuing to drive traffic, and continuing to grow their open air store footprint. The company was owned by Blackstone starting in 2011. Blackstone took us public in 2013, which at the time we had 518 shopping centers across the United States. Since that time, really over the course of the last 10 years, we have been very focused in growing in markets where we have a large presence, where we have a team on the ground, because we see great economies of scale, we see great retailer performance and great shopping center performance when we have a lot of assets clustered together. So over time, that has led us to the portfolio we have today of 348 shopping centers. The benefits of being a REIT are we allow the general public, both the retail and the institutional investor, to invest in shopping centers and open air shopping centers and all the great trends and things that are happening in the open air shopping center space, but to do that with a platform that has demonstrated the ability to execute, the ability to drive growth and value. So we love the REIT structure. We love the access that it gives to investors, and we love that it allows them the ability to own a small piece of a big company that continues to drive growth and value. From a sector perspective, there's a lot of good things to like about the open air shopping center space today. First, it is a low supply environment. Not much is getting built. And so what that has forced is tenants that are thriving, that are growing their store footprint, to look to existing retail product to expand. And those tenants are thriving, whether that's in the specialty grocery, off-price segment, whether that is health and wellness, QSR restaurants. There's a wide range of categories that continue to perform and continue to grow their footprint. And so they're doing it within existing centers because not a lot is getting built. The consumer has been resilient. Our tenants are performing. They continue to drive traffic. And I think as you look at our portfolio in particular and how we're positioned within that, we have the ability, because of our low rent basis, to attract great tenants, to drive those rents to market and continue to drive traffic to our centers, which is allowing us to sign rents at the highest level that we ever have, to bring occupancy rates to the highest level we ever have as well. So said simply, our tenants are performing. The store is the most profitable way to deliver goods to the consumer, and that's really enabled us to improve our shopping centers with those tenants. I think the bear thesis is what happens to the consumer. The consumer has been resilient now for years. And so do we see some level of pullback in spending, whether that's because of inflation or whatever else may be happening in the macro environment? And one of the things that we push back on, or that we inform folks about, is the fact that our retailers today have more data than they've ever had. And we have a buffer between us and the consumer. It's the retailer. And so the retailer today is making more informed decisions than they ever have relative to the sites they're selecting, relative to how they position a store in a given market, how that store complements not just those other stores, but their online sales as well. And so the retailers today meet the consumer wherever the consumer wants to meet them. And then the other thing that we sometimes get is retail as a sector. There had typically been turnover in the sector, whether that's bankruptcies, or retail is a dynamic business. And there are retailers that don't exist today that didn't invest in their store, didn't innovate. And so some of the pushback again is our tenant base, and the tenant base generally within the sector is as healthy as it's ever been. And the mix of tenants in a shopping center today, whether it is that grocery component, daily needs traffic, whether it is health and wellness becoming more essential, or value apparel at a discount that you're seeing with the off-price operators, they have been able to rely on that resilience of the consumer and continue to drive traffic and performance in their stores. Yeah. Why invest in Brixmor today is because the best is yet to come for the company. All the components of our business plan that have driven outperformance versus the peer group, and whether that's outperformance year to date, 1 year, 3 years, 5 years, 10 years, are not only in place today, the low rent basis, the redevelopment pipeline, the team that's been able to execute, but we have the ability going forward with all the work that we've done to do that even better with what is right now the strongest underlying credit profile that this portfolio has ever had. The redevelopment pipeline in terms of the size and the scale of it is as strong as it's ever been, and we continue to see great tenant performance. So with where we sit today, the mark-to-market upside that we have great visibility on growth, both in the near term and several years out, in terms of our ability to continue to create value with what we do every day in terms of reinvesting in our centers.